Hello again, traders. Doing trouble once again from DRFX, Swing Trading Mentoring. Going to be taking a look at a recent trade that was made on the Canadian Japanese yen, which provided me with a rate of return of 4.90% on my live account. To essentially show you once again that large rates of returns are possible in the currency market in a very short period of time, so long as we use the accurate trading tools of Japanese candlestick signals, trend lines, and consolidation setups. Now, of course, if you have any questions, you can let me know. You can email me at shepherdduane@gmail.com. You can also find me on Facebook and Baby Pips using the username DRFX Trading, as well as on Twitter at Worldwide876. You can also check out my website, swingtradingmentoring.com, where you will see a full description of the trading methodology that I use, as well as the pip targets, where for the most part, I target trading gains of between 50 pips and 70 pips within a 24-hour holding period. Now here you can see the summary of this trade, which provided me with a trading gain of 50 pips and which represented a rate of return of 4.98%. Now this is actually one of the last 4 trades that have been made on my live account, which, as you can see here, provided a combined rate of return of 13.33% in a very short period of time, essentially showing you that large rates of returns are definitely possible in the currency market in a very short period of time and with just a few trades. So what this means is that I'm basically halfway towards the 30% rate of return target, which, if you can hit these types of targets on a monthly basis, it will allow you to achieve large rate of returns in the currency market over both the short term as well as over the long term. Now to the trade itself. This took place on the 4-hour chart of this currency pair, where, as you can see, the market had formed this uptrend that allowed us to draw this uptrend line. And so what took place here was that the market eventually lost momentum at this area here and began to transition from the uptrend to the downtrend in favor of the Japanese yen. So what took place here was that the market created this transition in the form of a bear crown setup, which is otherwise known as a head and shoulders pattern. And so what I did was to wait until the market provided a strong bear signal, which, as you can see, came in the form of this bearish engulfing candlestick formation, which represented the right tip of the bear crown setup. And so what I basically did was to enter the market at the close of this candle, placing a stop loss above the high of the formation and trading it to capture a trading gain of 50 pips, which was a comfortable trading gain ahead of the anticipated pullback that normally takes place at support points like this. So bear crown patterns, head and shoulders patterns, or bull crown setups are one of the most popular patterns that you will see across the currency market that indicate the start of a trend change. So in the case of this bear crown setup, what takes place is that the market will form one last setup as part of the previous uptrend. It will then rally one more time and then U-turn to then break the trend lines that would have been formed along the way. Once the trend lines have been broken, it will then create another setup, which would represent the right tip of the formation, which would also represent the first setup as part of the new trend direction. So you're going to be looking out for this first setup as part of this new trend direction, and then once it's strong enough and clear enough, you then enter the market at the close of the candle and place your stop loss either at the high of the formation or above the trend line, a downtrend line that may have been formed as part of this new trend. So becoming familiar with this pattern as well as other trading patterns that indicate the start of trend changes will allow you to identify these setups very early and prepare yourself for a strong trading opportunity. Trend lines, very important when it comes to being able to trade the market. You have to be able to use the right technique in order to be able to, first of all, identify market direction, as well as to draw the trend line across to indicate that we're trading in an uptrend. So what we do is to identify the lows or the support points of the movement that is taking place bullish, and then we draw our trend line across the lows, across those low points to create the trend line. So these trend lines help us to determine market direction and to more accurately determine whether or not the market has started to trend change. And in the case in which you're actually trading in the direction of the existing uptrend, You can also use these uptrend lines to protect your trade by placing your stop loss at a comfortable distance below these trend lines. Of course, very important to familiarize yourself with Japanese candlestick signals. There are several that are taught by traders and mentors across the world, and you'll find them across the internet. But what I found is that there are specific types of signals that have the highest probability of providing you with entry signals to take advantage of trend changes and movements within consolidation. So double tops, double bottoms are, in addition to being a strong signals, they also indicate the start of trend changes, similar to what bull crowns and bear crowns do. ABC signals are also very common when it comes to the start of trend changes, and bear crowns, or rather morning stars and evening stars, as well as bullish and bearish engulfing candlestick formations, are the types of signals that you would look out to trade once that new trend direction has started and has been identified. So of course, this was a good example of how we take advantage of a trend change taking place. And it is also very important that when we're analyzing the market, that we use these 8 key steps in order to be able to accurately identify what is taking place in the market, and then take advantage of a strong setup that has taken place and capture a strong trading gain. So as long as you follow these trading rules, you'll be able to maximize on the trading gains provided by the currency market on a regular basis and exit the market ahead of sharp reversals, so that you can remain profitable and successful over the long term in this exciting $1 trillion market.